Year 2024 is about to come into an end, and see what a massive bull run Nasdaq 100 has seen. It has started the year close to 16,000 levels and already has breached 22,000. Close to 40% returns it has already given. What to expect from the year 2025? Can we expect another bull run? Can we expect it to move beyond 25,000 levels, or a U-turn, a reversal, and a crash is awaited here? What is going to be our strategy in order to profit trading Nasdaq 100 in the year 2025? What to expect, where to enter, where to exit? We will see with the help of charts and indicators. This is a long-term review, and those who are new to the channel, let me share that I do provide twice a day updates on Tech 100. The subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Towards the end of the update, I'll be sharing the trading levels, so do watch till. First, let's have a look at the charts alone. See, the year started close to 16,000 levels. We have seen a couple of dips here. This was the massive dip here in the month of August, and we have seen it declining towards 17,000 levels. Now it appears 17,000, 17,400 has become a strong base, a strong support for Tech 100, which if it breaks may lead to a stronger correction here. Now, why a correction and why a rally? If you look at the near term or long term charts in Tech 100 as well, see, this was the first, or you can say, a long term rally. In fact, the pace has accelerated post COVID. After the dip, the pace has accelerated. Then a retracement, a bigger retracement has arrived. And since then, we have seen a stronger run. So now, when you last 2 years, almost in the middle of 2022, you can find out, see, it was trading at around 10,400. It has seen 10,400 to 11,000 levels. And since then, it is almost more than doubled. So 30 months down the lane, when you see the charts, you can see it is already traded with more than double the yield. Now, also notice the rise, the retracement. Only this was the major retracement which we had observed. Since then, it is trading bullish. So bigger the rise, bigger the retracement could be. Now, this is just the first observation based on the chart. The second thing here is, see, it has consolidated enough here at 20,000 levels, and now it is very crucial for Tech 100 to trade below 20,000 and 19,500 400 zone. If any point of time in the next 3 months, if you see Tech 100 trading below 20,000 and 19,400 500 zone, we can say now we are ready for another round of dip, which is going to take it towards 17,400 17,000 levels at the first. Also, if you notice here, see, the bullishness has diminished. If you look at the current month, it has scaled past 22,000, but you can also notice that the bullishness has diminished. So the first month in the year 2025 is going to be important. And if it starts to retrace, and if you see it is staying below 20,800, we can say now the bears are back, and we can look forward to 20,000 levels, 20,200 levels in the month of January itself, and that could be the beginning of the reversal here. So this possibility and the levels you should watch out for, specifically at around 20,800 first, and then towards 20,200, 20,000 levels. These are going to be the first support. Now, this is the Fibonacci retracement, the lows and the highs. See, this was the major retracement what we had seen in the year 2022, and since then we have seen a good run. And if you connect the lows and the highs, the 50% retracement levels are at 16,300, and the 61.8% is at around 17,660 levels. So as I said, once it drops below 19,400, now notice 19,400, this is the same level we discussed. This is also a strong Fibonacci support. Below this, we are looking forward to 17,660 and 17,400 levels, and then below that is where major correction should be seen here. But right now, I'll say there are strong supports available first till towards 19,400. Let me also turn on the indicators, and when you look at the moving averages on the monthly charts, see, this was the rise and the retracement. Now this is divergent from the 20 period. It should retrace. The 20 period moving average is sitting at around 18,000. This could be another intermittent support here, but yes, before that we have to wait, because the more time it spreads at around 20,000, the higher is going to be the 20 period moving average, making 19,400 as a strong support next. Also, if you look at the stochastic, this is again back to overbought zone. If you look at the move here, rise towards overbought retracement, rise towards overbought retracement, a smaller retracement, and again a rise. So now it is forming a squeeze here on stochastic. It can possibly break out. Why this could break out? Look at the MACD on the monthly charts. See, it is a perfect V-shaped curve. It has seen the highs. what we had seen with the rise post COVID, and now is the time for it to converge again. I think this is extremely higher levels from where the reversal has to begin. At best, it can stretch this for Q1 2025. That is what, in worst case, I'm saying, in worst case, at best, it could stretch towards the Q1 2025. That is what you should look at, and possibility of a reversal is very, very, very high. RSI is again back to overbought zone. See, this is the fourth time in the recent past when it is entering into overbought zone, and it can sustain here. See, it is sustained for years here, and thus this is another probability, but I am a bit cautious of the same. Let's also have a look at the weekly. When you look at the MACD on the weekly charts, it appears the zero line is shifted here. It is just struggling in between this zone. This is the fourth time it is reversed from this zone, and it is trying to hit the top. But this is another observation that it must not certain, or it must not sustain this zone for long, and the possibility of a reversal will increase. And that is why I say, at best it can stretch the rise for next first quarter. That is the strongest possibility. Beyond that, I see a possible decline which is going to be sharp enough. In fact, even the first month itself will hint or signal the direction it wants to take in the Q1. Also, look at this. What has happened here? It is sustained here for 3 to 4 times, and then a sharper correction has appeared. Now, a stronger recovery. In fact, it has achieved further higher levels, which are strongly alarming levels here. And now, if it crosses over, this time it is not going to come back up again in the near future. The RSI is here on the top. At the top, the stochastic, when you look at the weekly charts, it is almost at the top, and it is now looking downwards. What has happened here? When it has come out the last time, it has shown a sharper decline for multiple weeks, and this could repeat again. Now, look at the charts alone. You will find, see, couple of occasions it has tried to beat the 20 period and move towards the 50 period. And now, if you connect the dots here on the weekly charts, you can find out the support here at 20,019,800 is pretty strong. Since then, it is just delivering higher lows, higher highs. This is how it has been trading. This is indeed a very good bullish channel here. Now, the 20 period moving average sitting at around 20,300, 200 zone, making it a very good support. So, first thing is, it has to now break below 21,000 levels in the coming week. If it trades below 21,000 levels, you can expect more drop, and below 21,000 level is where we can expect more bearishness, where we can expect it to land towards 20,550 first, 20,300, 200 zone the next, and then 20,000 levels the third. If 20,000 is taken any point of time in the near future, you can stay short. You can expect a bigger correction on the way. Also notice on the weekly charts, it's been almost 2 years since the bullish crossover has happened, but it is not that it cannot sustain this bullish crossover. Look at the history. The history is suggestive that, see, this time when it has started the run in 2019, it has continued with this bull run till 2022. So almost a 3 year cycle, then a cycle of retracement, and almost now 2 years here, 2.5 years. So it is good time. It is hard Tech 100 to show signs of retracement. The stochastic looking down here. Already we have seen the indicators. Let's also have a look at the daily charts, which will give you a fair bit of idea on what to expect in the coming. Now, on the daily charts, first important observation: the support it is getting from the 50 period moving average and the 21,000 levels, which is indeed a very, very good support. Now, see what has happened for the last two trading sessions here. You can find out it is almost identically symmetrical. Look at these two candles, almost symmetrical here, and see the support. It is close precisely at the 20 period moving average. Also, there is a gap left here, which it might cover soon. So, if you see trading below 21,200, 21,000 levels, that is the point of time we can see the bears are back. And if it trades below 20,750, 20,400 levels, we can see this is a massive reversal which is beginning. The stochastic at the top here, the MACD also crossed over at the top. It is trading with divergence and bearishness, and the RSI is dropped. So now we have seen the charts and indicators. Time for me to give you the trading levels and strategy. And before I provide you the trading levels and strategy for the year 2025, if you want to learn this art of trading, join my mentorship batch. If you just want to trade as per the signals, be a part of my signals channel. And those who are looking forward to a broker which offers you a stress-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now first we'll try to see what to expect from Tech 100 in the coming week in the month of January, and then we will see the broader outlook and the levels here, what to expect. So yes, the levels are going to be nearby for the coming week, and then it will broadly expand towards a greater range. So first let's talk about the levels to buy. Also, I'm going to give you the critical levels on the upside. Do watch that as well. Now first thing is where to buy. I will recommend you to buy if you see it is staying above 20,000, 21,540 in the coming week. Expect 21,600, 21,760 levels. Now this is the first critical milestone for the coming week which it needs to break, and if it stays above this, you can expect 21,840. Beyond this, 21,918 and 22,020 levels. So if at any point of time in the coming week, in the month of January, if you see Tech 100 trading about 22,020, expect that we may see 22,140 levels the next. And if that is taken in January, if you see Tech 100 trading above this, stay bullish for 22,330, 22,500, and then 22,657. Beyond this is where little bullishness will be seen, and now you can say that in fact Tech 100 might try to breach 23,000 levels, and breaching beyond 23,000 will be a very good signal for the traders for the next 3 months. And in fact these levels are applicable till the first quarter. If this is taken, then you can say we are looking forward to a greater rise here in Tech 100. But I think even if it tries to move towards these levels, a reversal will be very, you can say, probable, highly probable, I will say. If Tech 100 move towards this zone in the near future, the reversal will be extremely highly possible here. If it trades beyond this, I will expect it to move towards 20,360, 23,710, then 24,200, and breaking beyond this in the year 2025, 25k is must. Beyond 25k, sky is the limit. It is beyond my expectation. I do not expect Tech 100 to move towards 25,000 levels in the year 2025. This is highly improbable as far as my opinion is concerned. But remember, these are markets, these are supreme, and you have to sail along with the wind, not against the wind here. Remember the fact, sail with the wind, not against the wind. Though the chances are there that we may see a drop, still you have to keep your positions accordingly, because see, it can give you a pain if you are keeping an open position from 21,500. It can give you a pain. It can take it towards 25,000 levels in a hurry before reversing. Now on the downside, as I have observed critical support levels here on the downside, first in the coming week it has to break below 21,400 360 zone. This is the first strongest support, and then 21,200. This is the most important one. If this is taken, chances will be high that we may see 21,140, 21,000. 21,000 is very critical. Then 20,800 is also equally critical here. If this is taken any point of time in the month of January, stay short for 20,400. If 20,400 is taken, we are looking forward to a greater correction where 19,970 levels should be there. And if this is taken, stay short for 19,180 levels. This is applicable for the first 3 months. It can probably move towards the zone, and if this is also taken, stay short for 18,400. And then see, in between 19,180 also 19400 is one level you should watch out for, and 19660. These two levels you should watch out for. These are in between 19970 and 19180. Below this 18400, then 17500 levels here. If this is taken, stay short for 17,000. Below 17,000 is where a major correction, a major dip is awaited. We can look forward to 15,600 zone, and then below that I in fact expect it to move towards this. Yes, many of you can laugh it off, but these are markets. You should not ignore the voice of the markets. It is possible that I may be on the other side, I may be on the wrong side, but it is my duty to provide you the picture so that at least you can be a bit cautious here. Take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live updates, and join the channel memberships here on YouTube to support the effort. Thank you very much. Have a great profitable trading week ahead. Happy New Year to you and your family, and a prosperous year 2025. Thank you.